What's up, traders? Welcome back to another video. In today's video, I want to show you guys a very simple strategy that you can combine with ICT concepts, or let's say smart money concepts, and time and price, and make the most out of it. I did a previous video on GBP JPY, and then people really had a lot of value from it. So after that video, a lot of people have been requesting me to use that same strategy on different markets. So in this video, I'm going to use that same strategy coupled with ICT concepts on this pair, which is Euro USD. So this is going to be a very important and educational video. So grab your popcorn, grab a notepad and a pen, and take some notes while we enjoy this. Okay, so in this video, the first thing that we are going to do is, you can see that I have a bare chart over here. I don't have anything on it. So the first thing that we are going to do is, I want you guys to add uh this indicator, ICT kill zones. So you can come to your indicator session, just type ICT kill zones, no, kill zones like this, and there you go, you have it by lax algo. So once you select it, this is how it looks. This is how it looks, but then we'll come back to that later. So just keep it on standby, by the way, and then let's head right into the main source of today's video. So when we have a bear chart like this, what we are going to first do is, we are first going to identify where price is trading at, and then let me just give you a very general idea about how this strategy works. So imagine you go to the market and then you are going to buy, let's say, an orange, and they say the orange is $5.50 or $5.55, and then you are trying to bargain. The first price that you try to reduce the price of the orange to would be, let's say, $5.50. Okay, if you want to reduce it more, you might reduce it to $5 straight. Okay, so you like to round numbers up to their whole number. Okay, so that's just the same concept that we are going to be using. And if you are a bit confused, don't worry, this is just the beginning. You are going to get it as the video progresses. So we can see right now that price is trading around 1.085, 1.08547. Okay, so if we are going to round this if you are going to round this price to the nearest whole number, that will be 1.08500. Okay, so let's take our line, let's put it as, let's say, 1.08500, and then let's see what's up with that. I just want to show you guys something. Why it's not coming? Okay, great. So now that we have a whole number of 1.08500, we are going to measure 100 pips from 1.08500. No, sorry, we are going to measure 50 pips. We are going to measure 50 pips from 1.08500. Okay, so we just take our price and date range, or you can just use this price range, just put it on your whole number, and then measure 50 pips from there. So 50 pips is going to be, oh sorry, okay, good. So this is just around 50 pips. So from 1.08500 to 1.0900 is 50 pips. So we can delete this and just put in our next line at 1.08900. I hope you understand. 1.0900. Okay, so now we are going to keep doing this till we can get to a place where price has been trading around. So now we can see that price has been, trading from an up. We are currently in a downtrend, so let's try and put some more, lines straight up to this part so that we can have like a better idea about what I'm trying to teach in this video. So we are currently at 1.0900. So where next do you think our round number should be at? 1.0950. Okay, so we are going to take our line, put it at 1.0950 like this. There we have it. We're going to take another line. So now that we are at 1.0950, where next do you think our whole number should be at? 1 point 1.100. Yeah, if you guessed it right, 1.100. Okay, so now let's take a few quick examples of how this strategy works together with ICT concepts and then the indicator that I just showed you, so that you can um use that to make the best decisions. So we're going to start from here. Okay, so the whole idea of this strategy is that anytime price reaches any of these whole numbers or any of these round numbers, price tends to react sensitively towards these ranges from here to here to here to wherever price touches. You can see a very strong reaction from there. So somebody might say this is where the banks like to make their transactions, like to pick up orders or whatever. As for me, I don't know about what the banks do. I don't know anything that goes on over there. But then this is just an observation that I've had, and then I've decided to share it with you guys. So let's just take some examples. We are currently on the 1 hour time frame. So the what we are now going to employ our ICT kill zones indicator. Once we do that, we can see that our chart looks very cumbersome. So in order for us to have a very clear view on what price is doing, let's just drop down into the 15 minutes time frame, and then now we can have something much more clearer. Okay, so now let's just start from here. Okay, this is just a recap video just to explain the mechanisms behind the reasons why we have our lines drawn out on whole numbers over here. So once price started trading from here, you can see that price is trading around this zone, right? Price is trading around this 1.0850 level, and then what we have to do is that we wait for price to break and then come back to retest this zone and then see if we'll get a reaction. So on this day, when price was trading around this zone, there wasn't that much of a retest over here. But anyway, this was the Asian session. So what this particular indicator does is that it shows you the trading ranges of the Asian session, the London open, the New York open, and then the London close. Okay, these are very important times to trade in the forex market. So that's why I prefer to use this indicator. So I'm going to go ahead to show you the settings that I have on my indicator so that you can use the same thing, because when you select the indicator first, it looks a little bit different from what we have here. So you go into your settings and then you toggle off all these. Okay, I'm sure when you first use the indicator you might have all these on, so you toggle off all the 0.382, 0.618, 0.236, 0.5, 0.782. You toggle all of them off and then just leave the 0 and then 1 on. Okay, that's all you need to do. So now you come back to your charts. So you are going to have something like this. Okay, so during the Asian session, price wasn't trading around this zone, so we just leave it. And then if you're a London open trader or a New York trader or whatever, whichever session that you trade, just make sure that anytime it comes to the chart, price is trading around a whole number. So we can see that in this particular trading day, we can see that price is trading around 1.0900 level, okay, during London open. But however, there's not much sensitivity around this zone, because we can see that price broke strongly above the zone and made a little retracement during New York open and then rallied off. Okay, so we can be watching the market to see if we can get an entry around this zone, but we can see as price broke strongly here with a little retracement, we can see how much price how much price shot away from this zone and even came back to replace. And on this day we can see a little choppiness. So this is just what it is. But let's move on to the next day and see what is going on. So on this day we can see that during the Asian session, price was ranging somewhere in the middle, but during London Open, price was trading back around the 1.0900 level. Then we can see that price failed to break above that and even broke down a little. During New York session, price tried to come back and take out this high, which it did, and then we can see the candlesticks. Let me zoom in so that I can see it very well. We can see the way the candlesticks formation is going on around this place, how it's gyrating around this level. So if you have a good strategy which indicates that you should take a sell following market structure or whatever strategy that you want to use, this is just the base concept that price is trading around this whole number, and then there should be a reaction from here. So once you see a reaction from here and then you decide to take a sell, just take your sell from here, put your high above maybe a previous high, sorry, put your stop loss above a previous high. Where's my, okay, maybe you try to take a sell from here, you put your stop loss above a previous high, like this high, okay, and then target 50 pips. So if you are trading around 1.0900, we should be heading towards 1.0850. So you can see this is how we have been able to catch 50 pips on EURUSD during the New York session, okay, based on this simple idea that price normally tends to react around these whole numbers. Okay, so this is another trade that let's move on to the next day. On the next day we can see during Asian session price was trading around the 0850 zone. During London Open, price broke down. If I were trading on this day, I wouldn't take this trade because price is not gyrating around these whole numbers. So I'll just figure out that price wants to do its own thing. So I'll wait for price to break or even price to move around this zone and then see if I'll get a break in market structure. If price comes around this zone, like how we can see a high over here, a higher low, then we go on to make another higher high, come back a little and then break. Okay, had we broken this particular candle, the low of this particular candle, I would have considered that as a breaking structure and then sold to maybe 1.0800, okay, which is 50 pips down from here, which is okay. I haven't drawn that chart out, but then I hope you get what I'm trying to say, because this is just a little explanation with regards to the video that I did previously. So let's move on to okay, so this was during London Open. So during the New York Open too, price broke, but however price is still hanging in within there's 1.0900 and 1.0850. So once price hasn't come back to touch this zone, I'm still not interested in what the market is going to do. And then we can see that price started breaking down, and then now we are currently here. So I have a strong belief that price is going to at least retest here, and then I'll be expecting a break in structure. And then once I get that break in structure, I'm going to be buying from here all the way up to this place, which is 50 pips. Okay, so if maybe you are trading, you can just be risking 1% of your trading accounts for 5, because obviously this is like a 1 to 5 trade. Okay, so you can risk $10 and make $50. However you decide to trade, that's your own personal decision, but this is just the basic idea. So if you like, you can decide not to use the indicator that I've shown you, but this is just the way I trade because I want to keep my time and price working together. So this indicator is going to show you your Asian trading session, your London Open, your New York, and then your London close, so that you can incorporate those times, because those are very volatile times. Asia session is not very volatile, but however London session is very volatile. We can see all this price movement during London, okay, and then now during New York too, we see this price movement. So these are very volatile times. So if you are, if you are patient enough to catch price around during these sessions around these trading zones, like these whole numbers, right, then you are likely to have a very high probability setup or high probability trade, and then you can take your trade from here and then go. So thank you for watching this video, guys. This is the little that I have to share. I hope you enjoyed it. If you did, kindly like and subscribe, as it's going to help with the YouTube algorithm. And I also appreciate you guys a lot. And also thank you for all the support that you've been showing me on this channel. There's more to come, and there's more that I can't wait to give you. So without saying much, I'll see you guys in another video. Peace out.